Until the entire transfer is complete, the major money is here. Huge sums of money are stashed there. The ups and downs here aren't due to playing the little individual changes on a weekly or monthly basis. So, I'm taking a step back and looking at the broad picture. Allowing this silver boom phase to run its course is my current strategy. The stock prices of several of these companies might skyrocket, in my opinion. What is significantly greater than 10 times, perhaps even 100 times. It's Danny here, and you're tuning in to Capital Cause. Andy from Finding Value Finance is here today as my guest. September 2nd, 2025 is the date. Andy, I am incredibly grateful that you agreed to be a guest on my show. Danny, I appreciate you inviting me back on. I am deeply grateful. You have my gratitude. Andy, it's always a good time. All right, let's jump straight in. I have faith that you have some charts waiting for you over here. But what's most important to you? For today, what are you keeping an eye on? Precious metals like gold, silver, and platinum are all the rage right now, and for good reason. They look stunning. Precious metals make mining firms appear attractive. They appear to be quite enhanced, and we can examine them in detail. I remain a fan of the commodity complex as a whole. What do you think? It looks great. As gold and silver emerge here, with gold serving as our leader, I believe there are opportunities that the public is ignoring. In my opinion, there are some laggard things that are going unnoticed. Iron ore, copper, and other so-called base metals, as well as enterprises that haven't made much progress, fall into this category in a way that describes my work. Ninja purchasing is what I call it. The ninja approach to shopping is to enter a store quietly. Nobody suspects a thing. When it's really low, you simply stock up. So silver and gold are just stunning. Yep. Although they are receiving more attention, I believe there are other goods that are more valuable, aren't there? When asked, I would not mention worth. No one's paying attention to it. That's how I'll put it. Despite my belief that these are excellent entries, no one is viewing them. Yeah. You have mentioned several minerals, including iron ore, copper, and others. It seems like you're looking at a gold futures chart. Now that we've established who the main attraction is, we can move on to discussing the other commodities. Where does gold stand right now? Yeah, gold is making a comeback. Wow, that's amazing. This region of purple resistance was ours. In most cases, while you're trying to climb, you'll encounter resistance and be denied at that point, resulting in the formation of a resistance zone. By the way, we managed to get over that zone of resistance. I believe everything else will follow if gold remains our leader and continues to soar to new heights. Therefore, I prefer to begin with gold, due to the fact that gold is, quote, our leader, and it keeps reaching new heights. Accordingly, I believe gold may have another leg up in this area. Well, I don't know how to put it. Maybe a lot of people are fixated on pricing targets, but I'm not. The pattern is of a respectable size. And indeed, let's do this is often the first thing said while entering this space. The anticipated cost for this opening is approximately this much. This is the proper way to puke it up. And yes, perhaps 4,000, give or take, depending on the chart you use. We could in fact go to a greater level in this leg. It will be followed by silver and platinum, in my opinion. Plus, silver is looking great for the long haul with larger. Here we'll refer to it as a move. This makes things a little bit easier to see, which is why I prefer it this way. Indeed, I propose we play XAG. Thus, I perceive a comparable fractal in this case. This fractal, for example, has a large cup and handle. Then you'll have the cup and the handle. You can see the handle and another cup over there. Silver, or motion-wise, it's quite comparable. Just for fun, let's see if we can achieve the same percent gain here. Then we can grab this man and put him on top to get some reticence. Yeah, that proportion isn't going to happen. Still, I think it's great. I also believe that during the bull market in silver, we could gain several $100s. Our leader is gold then. Silver will be next. Platinum is likely to follow suit as well. In my opinion, the price of all precious metals will eventually rise. The cup and handle motif has been around for 45 years. This pattern is about to break, and it's a big boy. In other words, we've examined this pattern with a large number of other guests on multiple occasions. However, given the pattern's persistence over time, one would expect the breakout to be similarly persistent and long-lasting. Wouldn't you agree? Sure, no problem. In the beginning, the larger designs may have a very noticeable spike. Might as well go. Although it's hard to put a price on it, it's common to see a significant upward release after experiencing such massive energy buildup. Is it possible to start with $100 or $90? We certainly could. We could accomplish it in a flash. In fact, it's possible that it could accomplish something similar this year. I mean, that's how I usually see it. I believe that mining firms have a lot of promising advances in their ratios, so we can go into those if you're interested. To give you an idea of the magnitude of these patterns, I'll begin with gold and silver. They keep shattering. They are trending upwards. Everything appears to be in order from a commodity perspective. Next, I'd investigate mining firms, as that's usually what happens after that. Of course, I think we should move forward with it. Then let's do it, carry it out. For this reason, I propose a method similar to GDX divided by gold. Next, we will proceed with this. Just log off. We are clearly in the midst of a major decline, and the bottoming pattern is clearly visible here. Not long ago, we reversed a downward trend and are now moving upwards. And that's similar to the beginning. Is getting the commodity up and running, and it's doing great, is the general trend here. From an extremely low point on the charts, we're off to the races as the mining corporations begin to catch up and we break the downtrend that occurred in May and June of 2025. You have a long way to go then, if gold mining firms are to potentially outperform the commodity itself. Because of this, I would endeavor to find something. This is a great development, and I've already done some research and positioning in the stock market. At the very lowest, approximately a year ago, but it looks great now. Why don't the mining corporations take a little pause to regroup after running up quite a bit in the past year or two? In the near term, I am unconcerned. I take a step back and look at the broader, more distant vision. On top of that, some of these factors can undergo rapid changes. Therefore, I do not believe that things must be fixed. They are under no obligation to perform X, Y, or Z, merely because, for example, a relative strength indicator value is at a certain level. For a while, they may maintain a high level of strength. Companies did things like 5 times as much as they did in 2019, 2018, and 2020, and some even did 10 times as much. At this low of a valuation relative to gold, I wouldn't get too concerned about short-term market fluctuations. Finding entry spots that are also attempting to break out would be my goal. Some businesses are at the forefront, some are in the center, while still others are at the back. Plus, some of these are still in the early stages of development for the junior firms laggards. One of my favorite things to do is to start comparing them side by side. Another ratio that can be calculated is GDXJ divided by gold. Where I would have entered is down here, where I have my winnings from life entries. You descend to the very bottom. Moving upward off the bottom typically produces a wick after a big impulse. A wick represents the amount of selling pressure that was applied before consumers stepped in and purchased it in droves. Plus, you usually end up with a zone if you sketch a rough one like this one down below. If you have successfully bounced off of that point several times, it is an excellent place to stockpile. As a result, I would be seeking opportunities to accumulate in this sector. Personally, I see it that way. The fear of a downward break is shared by some. I'm not a fan of this valuation and the upward trend in gold prices. In 2022, gold prices skyrocketed, bringing them back to this region. Gold was caught in the act. For the miners, this is a perfect entrance point, as our leader, gold, is already moving. Now we're starting to move up in GDXJ and heading higher. Another thing I enjoy doing is comparing GDXJ to GDX to see what's occurring there. It's obviously low cost and very simple. We are on the cusp of ending this decline, and the juniors may eventually begin to outperform some of the bigger corporations. And that's when I start to feel pumped up, because the juniors are so pumped. Many of them are turned up to 11. So it's the kind of thing I enjoy seeing because it shows the leaders, the big boys, the new mods, and things like that taking off. When you start to focus on things that are leading, like gold, you can't help but notice things that are trailing, like junior firms. Good entry points are still available among the freshmen. Optimal would be bronze. Since gold miners tend to see higher price increases in silver, the latter is somewhat more leveraged than the former. This is due to the fact that both metals tend to rise at different rates. The mining corporations, on the other hand, essentially serve as a multiplier for the commodity itself. Therefore, I will say something along the lines of SIL split by silver when I go. Here we are at rock bottom, as you can see. I would have been quite interested in that. You feel the urge to climb higher. You tend to return to this location. So it's an excellent place to stock up. All I can do is stare at it. Additionally, it is common to experience a complete reversal of the little selling pressure. That leaves you with this 2016 impulsive purchase. A huge price increase, followed by little selling pressure that drags prices all the way down. At the very bottom, you'll see your purchase points. And we're going uphill from here. Going up against silver is looking great in my view. The upshot is that gold, unlike silver and many other mining commodities, tends to hold its value better. It follows that silver junior firms would likely sell off at market bottoms, whereas gold junior companies will likely sell off at their lowest points. So to say, they will be down 99.9% from their bull market highs. When the market enters a bullish phase, however, all of that unravels. There will be a winding down of events, and when the bull market finally ends, I predict that junior stocks will be the most expensive and have the greatest upside movement. The firing sequence is what we're attempting to determine by analyzing all these ratios and pieces of information. It can be observed from the ratios that GDX performs better than the beginning, SIL, and the juniors. After that, it would be great if they could beat the commodity itself. As a result, this is beginning to beat SILJ split by silver. After that, you'll notice that these dropping wedges and then these enormous surges upward occur in a matter of seconds. Additionally, the breakout for SILJ relative to silver has only recently begun. There may be a significant exodus from silver junior companies. Thus, this is significant. Yeah, that's what I'd be going with if you have solid entrance spots. You have to admit, when you consider the precious metals' historical trajectory in light of current events, that we've had quite the run. Is a breath of fresh air necessary for them? Is a break necessary? I think people are perceiving things in the incorrect way when they consider the amount of money that was invested in precious metals, commodities, and other such things. I feel that the true issue should be more along the lines of, are we normalizing? Rather than focusing on whether or not we're in a boom or a bull market in precious metals or commodities, we should inquire about this. For example, has the past half century or more been characterized by a slump in the value of commodities and precious metals? Is everything getting back to normal just now? It seems like no one else is inquiring about that either. Yes, in my opinion, these are effective under specific market circumstances. Money is flowing into precious metals, in my opinion, because of the current market conditions, which include an atmosphere of rising interest rates and the shattering of the 40-year decline. Next thing you know, bond market participants will flee if this materializes. Interest rates are rising because bond sales are outpacing bond purchases, a result of their preference for precious metals. Bond interest rates are rising because there is a shortage of bonds compared to their demand. At some point, that causes the stock market to experience pressure.